Hey everybody, welcome back to another GameStop breakdown. Tis I, Hello Good Trades, also known as Hello Good Game. I create Magic the Gathering arena content online for about 5+ years now, quite a while, and we've been trading GameStop just as long. But recently, kind of taking the step into the content creation world for technical analysis and my beloved baby GameStop. So join me along on this journey as we break down daily price action, all the data that we can find, and go through maybe a new indicator here and there as well. And today, well, we have the PMO or price momentum oscillator to break down because there's a lot of hype. People are saying, oh, Roaring Kitty's charts, his PMO lines just crossed, let's go. But maybe let's temper our expectations a little bit, learn about this indicator and what makes it bullish, what makes it bearish, and to see how we should feel with that recent crossover, which I can confirm is here. Now we do have this available as a direct copy thanks to the Ultimator 5 on Superstock there, or I guess Twitter as well, online in the interwebs. With all the settings already done. You've got your rate of change period, your PMO smoothing, your signal period, and your PMO moving average length already put in, matching Roaring Kitties, which is, well, exactly how you want it. So what does everything mean, HGT? Well, let's break it through. The purple line is our main line to be concerned with here. Now, it is our PMO, which takes into account a couple things. We have first our rate of change over, in this case, the last 35 days. And then you have the PMO smoothing on top of that, which is an exponential moving average of, in this case, 20. And that's going to give us the purple line, the two of those. Moving away from that, we have our signal period, which is our blue line here. Now, that's just a moving average of the purple line, in this case 10, a simple moving average. And then our PMO moving average length, in this case our multicolored line, which we'll go through in a moment, is the last 55 days. Again, a simple moving average. The line changes color based on your state of delivery, whether it is bearish or bullish, and you have the gray as a crossover. So first things first, you need your PMO line to cross its 10 moving average, right? Which we see here. Now, this is going to get false signals, and it's just a place where you'll want to pay attention, right? As it may be, time to do so. And then we see it be kind of a false break, but then reclaims, and now we have the second stage that we're looking for. The first is the original crossover, and this is a bullish setup. We're gonna look at a bearish setup as well. So when we have our PMO cross the 55 average, we get this nice gray box here, right? And then once the 10 average crosses the 55 average, it's going to turn this lovely shade of gold or orange, indicating confirmation of that reversal in momentum, which is great. So we're going, kind of from bearish momentum to bullish momentum. So going backwards, we have step 1, the original reversal of the PMO crossing the 10, and then the secondary reversal where the PMO crosses the 55, and then finally confirmation when the 10 crosses the 55, and that's going to change it to gold. On the backside, we have a bearish setup here. Just pay attention. You don't have to necessarily do anything, but you may want to get your order ready, or your cover calls. I don't know, whichever way you're doing, or just pay attention and get your bandages. I don't know. So it's gonna happen though. Nothing can run forever. Momentum doesn't just flow one way. So we see a bearish signal set here, and we can kind of pull down the price here and look at it too, right? And this was post earnings, right? We have our earnings run up here. This was not an earnings run up. For some reason, I was thinking that this was earnings. I'm insane. Oh, our earnings run up. This is a pre-earnings run up, and then earnings was on the last day. Okay, okay. Um, Either way, we have the pre-earnings reversal, right? Which isn't great. And, a lot of people are under the assumption that GameStop always dumps on earnings, and it does until it doesn't. But in this case, they're right again. Where we have, that pay attention signal, like I was mentioning, sorry, just rambling, into earnings, finding my bearings. And then we have the bond offering dump, which again is kind of annoying because it's all indicators for the most part are lagging. And whenever you get such a aggressive move, it's going to throw a reversal, right? Just the same as when Roaring Kitty came back, right? So the move happens, which throws the reversal. Now, whether or not that continues is kind of dependent upon your overall state of delivery on the longer term. So we've seen GameStop in a decline for some time, right? And these signals would false set because you'd get these massive pops, which would force the signal to turn bullish, right? But then it wasn't sustained and it would just die, right? So you get these really aggressive moves where it's not reversing bullish till it's already peaked, and then the whole bullish reversal is just retracement in price. You don't get anything until it does the exact same thing next time, which is aggressive. This one was nice. This one here had room for improvement. This one not terrible either, but this absolutely brutal here. Here as well, and again here where they're not setting bullish until they're already peaked in price, which is aggressive. And I think I'm attributing that to the stock being in a long-term decline, whereas now we're probably in a long-term period of ascension, right? So that should change. So it's important to wait for confirmation, to be layering your technical analysis, not just playing off one indicator, but now saying, okay, well, we're turning bullish. We have a bullish reversal here off of trend line, right? So it's that simple, right? With a gap to the upside to fill. You could even have your moving averages reverse at whatever indicators you're using, maybe your PSAR, whatever, right? Sorry, another tangent. So we want to make sure that we wait for confirmation on this and layer it with other indicators, which we'll go through more in future videos, of course. I think we went through what all the lines mean, the order of events that you want to see take place, both on the bullish side, right, as well as the bearish side, where we first have like the pay attention indicator, where the PMO crosses the 10 average, and then the get ready to act, where it crosses the 55, and then the confirmation you have to go if you haven't yet when the 10 crosses the 55, right? Both to the up and downside. Again, layering that with additional indicators. So if this reversed bearish at the top, I am willing to act on that. If it reverses bearish at the bottom, I'll probably sit through it, right? If it reverses bullish off the bottom, I'll probably act on it. If it reverses bullish off the top, well, that's even better, to be honest. So take note, I think, on a lot of these indicators as to where you are in the larger picture, right? Aside from that, if you have any questions about PMO, let me know in the comments below. I'll try to go through them, or could even make additional videos for them. Shout out to the Ultimator again for having all of these settings dialed in for us so we don't have to create it ourselves. I appreciate that. Don't get too hyped up on the original cross because it can be a false set, and I can maybe even find a false set for you here, right? So we see how our PMO crosses the 10, then it crosses the 55 through the gray crossover region. but reverses back down, a false reversal, because we need to wait for confirmation. We want the 10 to cross the 55 as well, okay? So don't get too excited, because we could definitely be witnessing exactly that. However, when we look at the broader market, the S&P was running, the whole market, everything was, going crazy, right? So off of the Fed's dovish speech, rate cuts coming in potentially September. We are still in a period of accumulation. With the news being good, I am not entirely certain about our manipulation leg of the AMD pattern here. It could come post earnings, if at all. If the market's hot and it just wants to run, sure, let it run. I was kind of expecting it to come early pre-earnings, as we were super retracing, but that time is gone. At this point, I'm looking to target the lower band of the gap. We have this gap on the 1 day, inefficiencies in liquidity. The sad part is, though, is they're often going to reject that lower band. We see that happening once. We see that happening twice. Could as easily happen a third time. However, if we can break that lower band of the gap and then base above it, right, maybe turn resistance into support, then we can look at challenging the consequent encroachment and even the upper band, which will be great. I would love a gap fill on that, and we even have a secondary gap and even a third one. But that's not going to happen without a catalyst, right? It's not just going to happen off this little PMO reversal signal. We're going to need a volumetric event, some sort of catalyst that drives the volume, so we're not just in the dark waiting for some swaps to unroll or something. Some news, a real catalyst that drives fresh volume would be absolutely phenomenal. So that's kind of what we're looking at here within those technicals. Even we have this bearish order block, at that 2440, which lines up with that gap. So we're going to have to invalidate, change it into a breaker block, maybe bust through it, come back, challenge it as support, and then we can go probably fill that gap. We'll see. We're going to take it day by day. I don't know when it will happen. I just have a high certainty that it will into the future. This is a good start. The PMO is a good start here. After a prolonged period of accumulation, we could be signaling the wrap-up phase of this. Now, it doesn't mean the price is going to go crazy tomorrow, but it could start to go up. And now the rate of change is the divergence between the lines, right? The distance between the lines. So, it doesn't necessarily that we're going to get divergence off of them. They could very much easily just slowly trend up together, as it is, of course, a delayed or lagging indicator, right? So waiting on the catalyst, but we'll see. Aside from that, Max Payne is chilling. We did close above it for the first time. So, maybe in the coming weeks, we continue to trend up. Max Payne moves up a little bit for us. We get that put to call ratio moving down to be more bullish towards that 0.3 area. We have a ton of out of the money options on October and January. We need something big to push these in the money. The strikes, $30, a lot at 30. Ooh, a lot at 25, though. I like that because I'm pretty sure we'll get these in the money. I'm not entirely certain about these 30s, though. And what are you even doing down here? Yeah, the 25 and 30s are loaded. So if we can get something to push us up above that, that would be awesome. And then January's kind of weighted, is similar. We got a lot of 20s, though, which is awesome. I love to see them already in the money. Really cool. These 24s, 25s, and then maybe eventually 30s. These are crazy. What are you doing? Those cannot be regular people. Well, it'd be a volatility play. But at this point, your theta is running pretty thin on those. So don't participate here. Always be buying in the money. And if you do participate here, it's lottos, small lottos. Aside from that, looking kind of aggressive. You guys are way too hungry 15,000 at the money calls being traded on Friday for weeklies. Insane. It was bullish though, so I hope you guys did well. A lot of volume on the whole chain, really, and it's just way too close. Like the 29th is next week, right? So I hope you get a good run. I hope you get a great run. Excuse me. I'm interested to see the open interest on the 29th come Monday when that information's available, to see how many of you held through the weekend, because that's insane. Moving out a bit, September 5th, still seeing a little bit of volume. Further out of the money than I'd like, so close to the, the expiry. Look, you better get above 25. Well, you got a week or two, but and then as you move further out in time, I'm a little bit more comfortable playing out of the money a bit more, but still nothing much. I'm not really seeing anything here. There's some 25s, some 30s. Even those 30s are cooked. I wouldn't be playing 30s. Why not just get a contract that's more expensive? 24s getting some movement. I like to see that. A lot of 25s chilling here for September 19th. 26, I think it's a dead. It's like a new chain. 25th is looking crazy here, like $25 mark, sorry, on 17th. If we can get something to put these in the money, woo, that's going to be spicy. And a bunch at 30 as well. But 30's further than I'd like to be playing. I don't know who's going to 35 and 40. You're insane. Don't be buying any of this, for the love of God. Unless you know something I don't, let me know. Moving out January 2026. A lot of time on this. I like to see this. So this is where I kind of like to see them be out of the money. Just out of the money, because there's a good chance before 2026 we get something to push us above 25, and that's a lot of weight moved in the money, right? And we see more at 30, less at 35, and even less at 40. So this is looking a lot more appropriate for the way you'd like to see the chain loaded. And then I guess we may as well just check out 2027. A lot of 20s in the money already. That's awesome. And people playing 50s and 65s as well. Crazy. So options chain, not great. There's no gamma ramp here, but you could build it. Be the gamma ramp you want to see in the world. Buy time, buy in the money. Try to buy when the IV's low. I know you've already heard that. IV working up. And don't hold through earnings. If you buy contracts before earnings, sell them on the run up, at least 80% of them. You want to hold a couple runners for the squeeze, sure, go for it. But you're going to get IV crushed 8 times out of 10. And scale out. Take profits along the way, specifically on your contracts, your option contracts. If you want to hold your shares, you can do that. But if you hold your contracts, you're going to get nuked, and you're going to cry and be like, I should have played options. It happens. You got to learn, right? So IV's working up, price is up. We're going to see how this kind of unfolds. It's still low. 66 is not much. 33 percentile, in fact. So, it could be lower, but it definitely could be higher by quite a bit as well. I'd like to see that up in the 120 mark, but earnings is still a ways away, and they've not even announced the date yet. We talked about the PMO, the price movement oscillator. As to why it's bullish, but also why you'll need to wait, right? We have some other indicators that we could go through in our future videos. We go to a MACD, on-balance volume, and the GME to SPX, which I guess is like a relative strength to market indicator. Is GameStop over or underperforming, right? On-balance volume, self-explanatory. There's an average on this, which is kind of nice as well. So that's kind of something that we could explore, is the averages on them. And then the MACD as well, right? So another momentum indicator for us, and we're best just to go through them each individually. And we even have volume on the chart here with some averages as well. And then we've got some moving averages, some exponential moving averages that maybe we can go through as well. And that's something that I love as well. I use a 200 EMA and then I use a 21 and a 50 simple moving average, right? So kind of combining the two for my specific style. So I'd be interested in exploring what Kitty's doing there as well. And at the end of the day, it's nice to go through PMO and kind of give myself a recap as to what it's doing and how to use it. Because it's easy just to delete an indicator from your chart and never go back to it again, right? So with that being said, Kitty's using it. We should use it. We'll go through these other ones as well. Nice Friday update for you today for GameStop. And of course, we have the other series of videos if you're interested as well. Because sometimes it can get a little bit boring trading GameStop as not too much is happening. So we always are playing the small caps, chasing that relative volume, which I learned how to do from GameStop. Would you believe that or not? We get that low daily average volume. You see people in GameStop, oh, I let low volume. And then you hit them with the influx of volume, the high relative volume. And that is what really moves stocks, not just GameStop, believe it or not. So if you want to check out some of that, we'll have a whole bunch of videos where we go through my daily trades just to review so I can kind of get better at the whole thing as we progress, right? So it's, I owe, again, my ability to trade GameStop from learning how to trade small caps. I apply what I do intraday small caps on the longer term for GameStop because it doesn't really move day to day. It tracks sideways. There's no volume for weeks and months at a time. So I got to A, keep busy, and then B, it's awesome to kind of refine my craft. So thank you for watching. If you have any comments, questions, or concerns, hit me up down below. Leave a like and subscribe to the channel as well. I'll be back with another. We're trying to do this every single day until we can all retire. And even then, I'll probably just continue because what else am I going to do, right? So cheers. I'll see you soon.